Hello, everyone. Wow, I am a spare tire in the capital world. Today is 3:30 p.m. on July 10, 2025. So what about the minutes of yesterday's Federal Reserve meeting? Let me show you a video. What about yesterday's meeting minutes? Currently defined as dovish. The main reason is that in recent weeks, Federal Reserve Chairman Powell has hinted this threshold for interest rate cuts rates may be lower than it seems this spring. However, it is not expected to cut interest rates this month. So, the opposite, BL, described one path in the middle. For example, inflation data was lower than expected, or if the job market is relatively weak. That may cause the Federal Reserve to initiate rate cuts in late summer. That means that this year's interest rate cut does exist. It just said that it will not cut interest rates in July. That may last into the second half of the year. In this context, the price of gold will become willful in the second half of the year, or maybe it has pulled up. Well, many people don't understand how to interpret this meeting minutes. The market has made the minutes of the meeting a dove, or hardliners, or a simple division of hawks, but in the process may ignore the local chairman of the Federal Reserve under regional economic differences and political pressure that we face. If the recent inflation data suddenly fell, or the job market is cooling down, it may accelerate the pace of interest rate cuts. Though, to a certain extent, it will verify the logic of early easing in the United States. So, this sentence means if, next week, following CPI data on July 15th, that will intensify the process of the Federal Reserve cutting interest rates. Maybe Huang or Wangjin will be worried after this data comes out. There may be a small pullback, but the results are rising because the market will hype the expectation of interest rate cuts. But if inflation is still relatively resilient, so the wait-and-see faction within the Federal Reserve may hold on for a longer time, or to buy in the short term, it is certain that the price of gold has been suppressed. The US dollar index is relatively sensitive to this interest rate expectation. Once the market believes that the Fed is leaning towards more sectarian, then the US dollar may weaken in the short term. Gold will go higher. You are like gold last night. Stabilized 3,300 and then came to 3,326. Walking is a typical example. So, at the same time as the economy weakens, under the expectation of accelerating interest rate cuts, US bond futures may get more attention. In other words, the price of US bonds will rise. That pushed the price of gold up. On the other hand, that is, if the Federal Reserve has a short term, there is no obvious relaxation of this policy, and some emerging market currencies, it may be subject to a greater devaluation or suppression. So what about this time? The market may use this foreign exchange hedging method to reduce the risk of fluctuations. Then, a currency to hedge against risk at this time, it will become another safe haven. That is to say, when the Fed has not relaxed its policy, dollar and Japanese yen, it may become a product for hedging. Therefore, it will be possible to estimate the price of gold in the short term. So, what do I think of gold? On Wednesday, July 9th, gold has made up for the previous long and short boundary, 3,286. Anti operation above 3,280. So we did this wave of 84.80 yesterday, even the bullish layout of 86. Worse? My goal is clear, is to see multiple doors, 3,311 in a day. So if we stand at 3,311, 338, and 13, even 35, 3,315 will continue to be around this 3,326 down the time. See how I also made it clear 3,311 may have a short-term decline in demand. So the current gold price in this 3,283. 3,326. This relatively narrow range is consolidating. This is also the first time in 6 trading days. This price for gold, for the first time all day, it is a mobile military training for less than 50 days. So, in other words, a low point from last week's higher band formed a bullish pattern. It seems to me a behavior that dominates the price in the short term. So, yesterday, gold tried to test the one near the rail is $3,245, but it did not fall below the location during the day. That is judging from the lower rail support of the Type 7. In this current form of rebound, it still needs a little impetus, but the premise is that gold must stabilize above $3,300. Only in the next rebound, bring a new area of resistance. For example, the 3,340, 3,346 area encounters resistance. There is also the possibility of another correction. So, if it breaks through Tuesday, after this high point of 3,346, may make gold regain its position in the main force area. But the real bullish reversal signal, it will still appear after gold has stabilized 3,365. So what if one of his downsides falls? Then gold will fall below a band low last week, near 43 to 345. Well, this also suggests that the bull's mood has slowed down. Once it falls below 3,245, then the first house target of gold below. It will be near 3,202. Then if it falls below 3,202, then the first target below will be near 3,149. If it falls below 3,149, like I said, then gold may go to this 3,000 mark to take a wave. So if Thursday, this point that we focus on today, is near 3,330. This is also a long and empty boundary today. So if there is no stabilization of 3,334, gold is still volatile and short. Although in this European market, there will be a wave of pullbacks. This 3,304. This purple, in other words, you may encounter a main force near 3,330. Then the decline retracts the support of 3,304. In turn, if the price of gold stabilizes after 3,334, then the next target will still test this 346. Go near 3,355. So if we say it's a risk aversion in this market, what if you touch it? Cow, Obi, is seeing this by new high for gold. You will go and type it above this 3,355. Then what if there are no emergencies? Then I will continue. The idea of shaking and empty is okay. Okay. Ultra, this out, T.